I do think by year end, we're back to these highs and actually breaking through the all-time highs on gold. So I do see it going much, much higher, but it takes some time to break those highs. Once you see 2080 or so, that high on gold broken, a lot of new money will flood in and you'll probably see a very big push to the upside. I'm a big chart guy. I follow the charts. The charts have been telling me stay bullish is on gold, silver, metals, commodities in general, but you have to say also, you could just simplify it down to say, hey, look at what central banks are doing all around the world. If they're the ones with the printing presses and they're the ones buying all this gold, probably means we as individuals should be buying gold as well.
Gareth Soloway, president and CFO of In the Money Stocks, has conducted a comprehensive analysis of the technicals for both gold and silver, shedding light on the current state of the economy. According to his assessment, the charts suggest that it's a favorable time for a bullish outlook when it comes to investing in gold, as the trend appears to be heading in a positive direction. Gold experienced an uptick on September 8, 2023, primarily due to a slight weakening of the US dollar. A short-term corrective cycle for gold began after it reached a peak of $1,980 the previous Friday. Subsequently, it traded lower for 3 consecutive days from Tuesday through Thursday. The weekly low, approximately at $1,940, occurred on Wednesday, September 6th. Although gold has since seen a higher low in the days following, it remains in proximity to the weekly lows. Soloway suggests that if central banks are actively acquiring gold, it implies that it might be a prudent move for individual investors to consider adding gold to their portfolios. In July, central banks worldwide added 55 metric tons to their gold reserves, signaling a significant interest in this precious metal. Just before you watch Gareth Soloway's interview and latest market trends, make sure to subscribe to our channel and give this video a big thumbs up. Nevertheless, Soloway suggests that if silver's price can break above a specific level, roughly around $25.50, it could trigger a more significant upward movement in its price. It's important to note that while silver experienced a brief surge on Friday, it anticipates a weekly drop, mainly due to the relative strength of the U.S. economy on a global scale and the anticipation of the Federal Reserve's forthcoming monetary policy decisions.
When we look at technical analysis, there's a high pivot, which was right here in 2020. We then hit a double top. Double tops have big pullbacks. That's what we got here. And then you get triple tops. This is a triple top in technical analysis. And triple tops usually have shallow pullbacks before they look to break to the upside. So that's, if you look at a textbook or if you look at past scenarios and charts, this is exactly what happens. And if we look here, we can even see how we had this downsloping yellow trend line, pivot high to pivot high. We broke out above it to retest that high. We've then checked back here and then again right here. And then we have another trend line here, this downsloping one, which we just broke above. So it's a very slow period. We know that gold is not a crazy mover in terms of percentages, but slowly you're seeing level after level get broken to the upside. I think it's been a combination of that the environment we've been in. It's been one where industrial demand for silver is relatively strong, but investment in silver ever since the Federal Reserve has been printing money, and we're going back to 2009, 2008 here, it's that money has wanted to chase where the best returns are. And we've really seen, we know technology, we know the NASDAQ 100, we know stocks in general have been outperformers. And so there's kind of been this void in people's portfolios where they're not really heavily invested in metals. But I do think that eventually we're going to see that resurgence in the metals. And I still remember vividly going back quite a ways, back to the 2010, 2011 bull run, where this was just kind of meteoric. And what we could even see here is you could even go back to this period, and you had this pivot top right here, right? Little downsloping trend line, and you hammered it here, pulled back. We had this pretty big dip all the way down to about $8.75. We hit it again, and when we broke out, you had this big move from basically $19 all the way up to about $50. And so in many ways, you look at this period, and it's almost the same, right? Here's your move up. Here's your 1, 2, 3. And my guess is when we do get that push, you literally could see a 1 to 2 year move that takes you back to $50 as a double top on silver. So again, we have to break out above this level, but again, just looking back historically, very similar patterns, downsloping trend line, but notice when the move started here, it was when it broke out. And so I think we need to see that 25.5, 25.75 breakout, and it should kickstart a bigger move in silver. And remember, investors are driven by greed. And so when we get that breakout, that's where everyone comes in and rushes in, and price goes, crazy to the upside, essentially. Yeah, so the biggest one right now is this one going back to the highs of around $30. We had this high, and then I still remember Wall Street Bets trying to pump it back here in February of 2021. That failed miserably. And then you have these other pivot points where you can just draw a trend line right back down. So if this one, to me, this one that I stretch out, it's right around $25.50. That, to me, is the big one. Now, you do have a little smaller one right here, which again is right at this level here. We obviously are pulling back in recent days off of that level. And then on the downside, you have two as well, right? So we can even remove this one, but we have this upsloping white line, which is currently around 2265, excuse me. And then this one down here around 20.5. So for me, I'm looking at what's called a wedge pattern, right? Where you have a big move and a lot of sideways chop inside of that. And ultimately, I expect it to break to the upside. Doesn't mean we can't go test the lower end, but eventually I think it breaks to the upside. And once we get through this 25.5 level, you should zoom pretty quickly to that $30 level on silver.
Dallas Federal Reserve Bank President Lori Logan stated on Thursday that while it is possible to consider skipping an interest rate increase at the upcoming meeting of the U.S. Central Bank, it is likely that further policy tightening will be necessary to bring inflation down to the target rate of 2% in a timely manner. The Federal Reserve has increased its policy rate by a total of 5.25 percentage points since March 2022 as part of its efforts to combat inflation. At its peak last year, inflation reached 7% according to the Fed's preferred measure, the Personal Consumption Expenditures Price Index. Soloway holds the view that inflation will remain elevated for an extended period. He believes that the Federal Reserve will need to keep raising interest rates for an extended period to address the inflationary pressures effectively. Now, let's move towards the interview.
The main factors is that we still see technology stocks doing really, really well, right? The NASDAQ 100 has come back dramatically off the October lows. And so people are still saying, hey, I want to be in these risky assets. I don't necessarily want to be in gold or silver right now because, yes, inflation's been an issue, but the Fed, everyone believes the Fed is bringing inflation back to sub 2%. I'm not in that camp. I think inflation's going to stay higher for longer. I think the Fed is going to have to fight it with higher rates for longer. And I think the market at this point hasn't come to that realization. And so still the tech stocks, for instance, an Apple or NVIDIA, these stocks have run tremendously. And that eventually will start to come back in when we realize that hiking rates is going to stick around for longer periods. And I do think the metals begin to show their shine once that happens. But right now, investors are saying, well, where's my best bang for my buck? And price action is drawing them into the technology stocks. And even oil to some extent. Oil has been on a run recently, and we're seeing oil stocks doing very well. So the metals have kind of been left behind, but I do think they start to outperform sooner than later. The way it's going to move the needle for precious metals is based on inflation, right? So we've seen inflation come down, and you look at 12-month CPI or month over month, generally it's been down until the recent last read, and that was when oil began to rally off of its lows here on the charts. So the CPI year over year is going to start to go higher versus lower. So yes, we're still elevated on CPI. It's come in a lot, but you're now starting to see a lot of these commodities pick up steam, and that will make it harder for the Fed to cut rates again and print money later on. It'll keep inflation higher. I mean, there's this narrative right now out there that the Fed somehow is going to engineer this perfect landing. You know, they're even calling it a no landing scenario where we're just going to keep growing as an economy. And again, I just always push back on that and say, show me one time in history where the Fed has actually engineered a soft landing or no landing scenario. And they just haven't. They're always looking at backward data from periods ago, and they usually go too far one way or too far the other way, and it just creates this, they're always playing catch up. So again, you're already seeing it with the labor market starting to weaken, economic data starting to weaken more and more, and then you throw in higher oil prices, higher gasoline prices, and all of these commodities, and it's just putting more and more stress on the consumer, right? We have $1 trillion plus credit card debt. We now see defaults on credit cards that are the highest since 2012. And so to me, I'm seeing like it's almost like a slow train wreck, very, very slow motion train wreck, but it is happening before my eyes, even though the mainstream media is not really talking that aspect up yet. Price action is actually much more bullish than it actually looks. And the reason why is if we bring up the dollar chart, this action here, we've had a very, very strong dollar since July, the July lows. And even going back, I mean, if you go back to 2020 or so, the dollar was a lot lower. And then if we flip over to gold, we can see that gold is very close to its all-time highs. It's not at its all-time highs, but it's very close. So the price action while treading water on silver and gold, if you actually include the dollar and what usually would happen to these metals, price action to me has been very, very solid.
Silver's price has not seen significant gains during stock market crashes, but its price declines have been less severe than the S&P averages. Soloway points out that since the 2008 financial crisis and the Federal Reserve's monetary stimulus measures, many investors have favored investments in technology and stocks. This has somewhat diminished silver's appeal as an investment option in recent times. Soloway mentioned a failed attempt to boost silver's price by a group called Wall Street Bets. In February 2021, Wall Street Bets' effort to manipulate the silver market faltered as the precious metal swiftly reversed its gains on February 2nd. Despite notable daily demand for silver ETFs, this strategy seemed destined for failure from the outset. That's all from us. If the video resonated with you, make sure to join our community by subscribing to our channel and enabling notifications with the bell icon. Surprisingly, around 80% of our viewers haven't subscribed yet. We're aiming to reach 3,000 subscribers in the next 2 weeks, and your support could make a big difference. Thank you for being a part of our community.